morning, and welcome to Investment Talk TV, brought to you by the award-winning advisors at Legacy Wealth Management. And now, with the latest information on the stock market, your investments, and retirement opportunities, here are Legacy Financial advisors Paul Meyers and Brady Brunsvold.
Hey, well, good morning, and welcome to the 24th episode of Investment Talk TV. I am joined today by not one, but two great people. Over here on my right, Brady Brunsvold. Good morning, Brady. How are you doing?
Hey, good morning, Paul. Happy to be here. You know what? I forgot my coffee cup.
Oh,
so,
my God. I have an extra.
Do you?
Oh, yeah.
We'll have to
I'm
share.
ready.
We'll take turns.
That'll be good. But not only do we have Brady here this morning, we're also pretty excited to have with us the one and only Steve Poitras. Good morning, Steve.
Good morning, Paul. Good morning, Brady. It's really a treat to join you, not in the radio station, but in the TV studio.
Yeah.
Very nice.
Steve, of course, is a regular on our radio show and has been with us for how many years have you been there, Steve?
I believe that we reached the 10-year mark early this year in January.
Wow, that's great. Well, it's good to have you on board as a kind of a guest commentator here on Investment Talk TV. This is our 24th episode. We have a lot of exciting things to talk about. Coming up next Saturday, we have the big NDSU Bison UND Fighting Hawks football game.
Should be a good one this year. Wow.
It's going to be. Once again, they have not asked me to suit up and play quarterback.
I think Dan Michaels beat you to it.
One more interception, though, and I'm going to be on the list. I know that'll be true.
He is a lockdown cornerback.
Yeah, that is for sure. Anyway, we have other things coming up. We've got St. Patrick's Day coming up on March 17th. That's big.
And the parade is going to be the same day as the Bison Fighting Hawks game, I should say.
The parade, if you happen to be in the Fargo-Moorhead area, they're going to have a big St. Patrick's Day parade. And, of course, according to our weather prognosticators, going to be nice weather. So who knows? It should be good. Speaking of St. Patrick's Day, Steve,
yes.
I know you brought along something a little extra to kind of put us all in the mood, didn't you? And you look pretty darn good, I might add.
Well, I'd be thanking you very kindly.
It's kind of our token leprechaun
My
look.
costume for today.
Yeah.
You're a little old to be believing in leprechauns, though, aren't you, Paul?
I've heard that joke before. Yes, I am. And I am a little bit old to be believing in leprechauns, but I believe in you, Steve. And you know what? If you haven't heard us on the radio lately, you really need to tune in because we have a good time there as well. And that's on KFGO 790 AM out of Fargo, KFYR 550 out of Bismarck. We cover the entire state of North Dakota, most of South Dakota, a good part of Minnesota, and we're on every Sunday morning from 8:30 to 9:30. By the way, we have a big announcement to make, Brady.
We do.
Yeah, it's going to be exciting.
Okay.
As most of you know, we have been broadcasting here on Channel 6 and Channel 8 out of Fargo and Grand Forks for quite some time now, Sunday mornings at 10 a.m. The big announcement is that beginning on April 4th, that's a Sunday coincidentally, not only will we be broadcasting out of Fargo and Grand Forks and the surrounding areas, but we're going to expand by popular demand. We're going to be in Bismarck and Minot and Dickinson and all of those surrounding communities. In fact, the entire state of North Dakota on the ABC network, you'll be able to see us. Now, out there in the western part of the state, they're a little bit ahead of us. They're going to be on from 9:30 to 10.
I see.
And then we'll be on from 10 until 10:30 in this part of the state. But anyway, it's going to be a great time, and I hope if you have friends out there, and I know some of you do have friends, if you have friends out there, tell them to tune in to the two TV stations out there. Let's see, we've got KMCY in Minot and KBMY in Bismarck. We'll have to figure out what those channels are. And don't forget, Brady, there's another way to watch us.
Well, that's through the magic of the YouTube, of
Yeah.
course. Of course, as we see every week.
Tell us about the YouTube. How do you find that?
Well, it's really easy. You just go to youtube.com or open the YouTube app on your little cell phone, and you search up Legacy Wealth Fargo, and there we will be in all of our binge-worthiness. You can watch us
People
all in
can
a
watch
row.
all 24 episodes in a row.
I do, once a week. Yeah, it's fantastic.
That'd be 12 hours of nonstop Brady.
What else would you rather
That'd be
do?
a lot. I don't know. That would be a lot. Well, anyway, we're pretty excited about that. Today, we're kind of zooming along because, boy, do we have a lot of things to talk about. I wanted to mention that not only is it St. Patrick's Day coming up, not only do we have some big football coming up, but the month of March is a special birthday time at our office. We have a mascot puppy named Lucy.
Yeah.
And most of the other staffers who work with us also have animals. So we put together this little tribute to kind of recognize that this is birthday month at Legacy Wealth Management. There it is. I think it's great.
You know, Paul, so my wife's birthday, her 40th birthday, don't tell anybody,
No.
but it's her 40th birthday this weekend. And I was actually going to put her face on that slide. And I said, that's maybe not a good
Not a
idea.
wise move, Brady.
But happy birthday, Jess. You're out there. I love you a lot. And happy 40th birthday. We're having a good time.
Yeah, isn't that great, Brady?
Yeah.
What I'd like to know, though, is why she married a guy so much older than she is. I don't know.
That's a question we'll never know.
What surprised me, Paul, is that Lucy's already 4 years old.
Yeah.
Lucy is 4 years
time
old.
really goes.
And, the reality is that at Legacy Wealth Management, we know that investing is a serious business.
Yeah.
And we take it very seriously. But we like to have a good time, too. And we kind of get a kick out of the fact that we have a mascot puppy there and a fireplace in the lobby. And when new people come in, they get the hind-legged dance. And it's not from Brady. It's from the dog.
Yeah, she only attacks every other client that comes in.
She's
So
never attacked
It's been pretty
anybody,
good.
Brady.
Yeah.
You're the one that gnaws on him. I don't know what's going on with that. Hey, today's agenda includes a lot of things. We've got 5 points in 5 minutes and a bonus point today, so we're going to be up at 6. We have a new weekly question as part of our Investment Talk TV question of the week. Plus, the Lone Ranger is going to make a reappearance.
I like that one.
It just wouldn't be Investment Talk TV if we didn't have the Lone Ranger from time to time. We've also got our viewer mailbag, and we have a special question this week, and it has to do with one of our more interesting topics, and that would be annuities. So you're going to want to sit on the edge of your seat watching today's show because we're going to get to that viewer mailbag and talk about annuities. Plus, of course, we're going to take a look at the stock market week in review. Man, Steve, have you noticed? I mean, this market has been crazy, hasn't it?
Resilient to all challenges and comes back stronger than ever.
Well, that's a good thing to do. Well, in any case, Brady, I don't know. We better move along and take our investment question of the week.
It's now time for the Legacy Wealth Management Question of the Week.
Well, Brady, I know you remember this. Last
do.
week we had a question about PE ratio.
Yeah, a little bit of a more challenging question, I would say. And the question was, what does PE ratio mean? And what is the PE ratio for the company Best Buy? So two-piece question. And we had a lot, considering I thought it was a little bit more of a difficult question, Paul, we had a lot of good answers, a lot of correct answers. But first, Paul, let's talk a little bit about what is PE and what does the PE ratio mean? And it's simply, as the definition goes, it's the price per share divided by the earnings per share of that company.
So it's a ratio of price to earnings.
Exactly.
In other words, if their price is $100 and they earn $10, that'd be a 10-to-1 PE ratio.
That's exactly right. And it's often used, Paul, to determine if a company is undervalued or overvalued. And it's kind of like golf. The lower it is, the better. And so
I thought it was the other way around in golf.
well, and it's also interesting that it's used apples to apples comparison. So if you have very similar companies, you can kind of compare the two. But if they're two completely unrelated companies, it doesn't necessarily apply quite as much. But generally speaking, that's what PE is for.
And we had a winner. We had an awful lot of people who sent in the correct answer.
Yes, we did.
And we had a few people who sent in some funny things as to what PE ratio means. We had to separate those. But we had a lot of people who knew exactly what it meant and what Best Buy's PE ratio was. And the winner this week, Steve.
Marilyn from Wahpeton, was it?
Yeah, Marilyn from
But I
Wahpeton.
want to know, what is that PE ratio for Best Buy?
Well, it changes, as the price changes, Paul, Steve. And currently it's right around 15.8, maybe a little bit
That's
lighter.
pretty good.
Yeah,
That's pretty good.
Yeah. So, and Marilyn from Wahpeton was our winner. So, congratulations to Marilyn. If you're out there listening, we'll be sure to send you the picture of the Hot Wheels car in the very near future. And we do have, Paul, a question for this week.
All right. The question for this week, by the way, I was going to look up and see what Tesla's PE is. You might be interested in knowing that they don't even have a PE. Oh, no, they do. It's 1,083.
Wow.
Yeah, it tells you that Tesla could be
Look,
overpriced.
Amazon went on for years
yeah.
that you couldn't determine it because they weren't making any money. But
That's
look
exactly
where they
right.
are
Very,
now.
very true.
So this week's question of the week, kind of an interesting one, I think. This week's question of the week is all about contributions to IRAs. What is the amount that an individual can contribute? The maximum amount for a traditional IRA for the year 2020 taxes. Now, if you're under 50, we want to know what the limit is. If you're over 50, we want to know what the limit is. And if you think you know the answer to this question, and you really should, you send us an email at team@legacywealthfargo.com. Be sure to include your name, address, and phone number. We're getting some people who are not including all those things.
Yeah.
And it's hard to send the big prize and other things
All the
like that.
fabulous goodies. Yeah.
And it's hard for them to get our crank phone calls and things like that, too. So be sure you include your name, address, and phone number. We'd love to be able to put you on our list and keep in touch with you from time to time. And it is kind of amazing, Steve, I know you're kind of a guest today, so you don't get to see it all the time. The numbers of people who keep tuning in. It's very refreshing and pretty thrilling. And even today I had a phone call from a gentleman in Frazee, Minnesota, who says, I watch your TV show all the time, and I still want to talk to you.
Very few insults that we get. That's right. Very nice.
Every week we take a look at the major economic events that are happening in the country, things that are influencing the way the stock market moves. As we like to say at Legacy, we don't always know what's going to happen next week, but we take a look at the indicators, we take a look at the economic trends, and this helps us figure out what direction the market seems to be moving in. We call this segment 5 Points in 5 Minutes.
Every week, the advisors at Legacy Wealth Management, with the assistance of economic researcher Mick Higley, comb the economic reports, and we come up with data and information that's helpful as we analyze the markets and put together our advice. We call this 5 Points in 5 Minutes.
This first point is such a toughie. I want to turn to our new guest commentator, Steve. What do you got for number one?
Well, we're marking kind of a year since the pandemic really went on, and we had the lockdowns, the quarantines, and all of that, and the crash or the big dip in the recession and
almost exactly a year, because it was last February and March.
Well, I know the last day of school last year in Fargo schools, and I think a lot of places, was March 13th.
Yeah.
Well, prior to that, the beginning of last year, 2020, the Dow was around 29,000. Where is it now? It's trading more than 32,000 and in record high territory. The S&P 500 at the end of 2020 was around 3,200. Now it's actually closer to 4,000. It's been over the 3,900 mark. Nasdaq was at 9,100, and it has traded as high as over, but it's currently around 13,400. So that was before the big bear market of early 2020 and the rallies that followed. It was the fastest bear to bull market recovery ever.
And, I think, Brady, what's interesting about this is that technically they consider the bull market ended last March.
Yeah.
And we started a new one.
Yes.
Which I think is great because, they kept saying, well, how long can this bull market go on?
Fresh reset.
Yeah, we got a fresh reset. It's like a pinball game where they say, okay, you got a new game.
Extra ball.
All right,
That's right.
Brady, tell us what's going on in number two.
All right. Last year, that's 2020, the contraction of the U.S. economy, down 3.5%, was the largest drop our nation has experienced since way back in 1946, or 74 years ago.
And another thing about the coronavirus situation in this country is obviously it was incredibly impactful on people losing jobs, losing employment. And I think it's kind of interesting when we take a look at point number 3, the number of jobs that were lost and the recovery that we've seen. According to our research and from the Department of Labor, many American employers have recovered already. And as of the end of February, they've hired back 67% of the 25.5 million jobs that were lost last year during those 2 months of March and April. Now, that's interesting. But, I think there's a number of details just below the surface of this. If they've hired back 67%, we still got a third of the jobs that have not recovered, at least according to this statistic.
Yeah.
So very impactful, and I think it's a reason why the market has been getting stronger, is because more and more jobs have been added.
And the number of those applying for unemployment for the first time is still up there around 700,000. It's pretty high. Okay, next one, the Senate version. I think this was basically what was signed by the president on Thursday. The American Rescue Plan Act of 2021 would or will provide stimulus payments to 87% of U.S. households. That's 110 million households. And I was thinking about it, Paul and Brady, a $1.9 trillion stimulus, that basically represents about a 10% boost to our overall annual economy in the U.S.
And that's probably a good reason why the markets are doing so well this week.
Absolutely got to be a main factor.
I think
there.
Some of that was baked in, wouldn't you say, Brady? But,
yeah, and I think there's a certain factor as far as optimism, sugar high. You hear that referred to quite a bit. So hopefully endures, but it might just be a short boost as well. So, all right, point number 5, Paul. 13% of outstanding home mortgages nationwide as of the end of 2020, that is to say 7.2 million mortgages out of 53.9 million mortgages were refinanced during the year 2020. Pretty interesting.
Thanks, of course, to the low interest rate.
What have you seen for interest rates, Brady? You've been watching that pretty closely.
Yeah, so they've certainly come up. I think, at beginning of the year, they were as low for a 30-year fix as low as 2.25%, and now they're pushing 3% again. So they've certainly come back up again. And if you were able to refinance during that period, certainly a win, So I would anticipate they continue to go up at least for the short-term periods. So
Well, interest rates are pretty low, and it's interesting when they tick up just a little bit, it seems to cause a big disruption
Sure
in the
does.
market.
Well, and those historically, if you remember back when we were paying 9, 10, 11, 12,
Oh,
and more
wow.
percent for fixed term mortgages, these even 3% sounds
Sounds pretty
incredibly
good.
low.
Historically,
In fact,
yeah.
a general piece of advice that I give people if they're thinking about buying a new home is, you can buy a lot more home now than you could 5 years ago. Interest
Absolutely.
rates are so low that, you should get out there and get the home you want, because here's the cool thing about your home mortgage. The amount of money doesn't go up every year, the amount you pay, but potentially your salary or your income or other things might.
Of course, on the other side is, of course, the pressure, the upward pressure, the appreciation of homes, their sale price, which, when you're in some markets where, you have lots and lots of people bidding on the same house and people end
Oh,
up
yeah.
getting more than they were asking originally, higher than list.
Very good. I remember when Johnny Carson was on TV and he said something like, who put the coffee in my coffee mug? Hey, let's talk about old people for just a minute, like Warren Buffett. How old is Warren these days? Anybody know? Is
He
he
is,
94 or something
Late
like that?
80s.
Yeah,
Late 80s.
he's very old.
Now, Warren is just an amazing guy. And every year he has his annual meeting, and he also sends out an annual letter. And just recently he released his annual letter where he said that bonds are not the place to be these days. Fixed income investors worldwide, whether you're a pension fund, an insurance company, or a retiree, if you're in fixed income, you probably face a bleak future. And you know what? In a little bit, when we talk about our viewer mailbag and we take a look at the letter that we got, the email, and the question that was asked, they're talking a little bit about fixed income there.
Yeah.
And I think Warren Buffett's advice is pretty good to take a look at. Every week we like to take a look at some of the stocks that are on the move. And it just wouldn't be Investment Talk TV if we didn't invite our old friend, the Lone Ranger, to come back and visit us. So here he is, 3 stocks on the move this week.
Faster than the Lone Ranger and Tonto. Here is Legacy Wealth Management's quick look at 3 stocks on the move this week.
Well, that's right. Thank you, Lone Ranger. Thank you, Tonto. And Silver, I guess, too.
Was it Clayton Moore? Was that the name?
Clayton
And
Moore
Jason, was it Jason Silverheels or
Jay Silverheels.
Jay Silverheels?
His
Tonto.
friends called him Jay. I don't know. His mother probably called him
You can
Jason.
call me Ray or you can call me Jay, but don't
think
call me Tonto.
I think Jay was from Canada, if I remember correctly. Jay Silverheels. Great show. The Lone Ranger, just about as exciting as Investment Talk TV. Hey, the 3 stocks we want to talk about that the Lone Ranger was referring to, number 1 is one called Crispr Therapeutics. Number 2 is called Roblox. And number 3 is called Eli Lilly. Let's take a look at those 3 companies one at a time. The first one is Crispr Therapeutics. Now, that's an interesting chart of Crispr Therapeutics. Let me tell you a little bit about them. Crispr Therapeutics, I think, is a fascinating company. They're headquartered in Switzerland, and they're developing what is called transformative medicine as they work on gene splicing and gene editing to impact major human diseases such as cancer and rare disease. Basically, what they're doing is they're editing your DNA and your genes to get rid of some of the causes of these diseases. They were formed in 2013, and as you can see from this chart, which is actually a fairly short-term chart just from the beginning of the year, they have been on a wild ride. Back in February of 2017, Brady, they were down as low as $11.63. If you bought them then, you were pretty happy. A year later or so, actually 4 years later, on January 15th of 2021, they were as high as $220, and that's before they fell down to most recently about $125. So Crispr Therapeutics on the move, not in the direction that we usually talk about, but nevertheless, they're on the move and falling down.
Certainly cutting edge technology, and there's a lot of potential for huge gains if they come across cures or fixes for genetic problems. So definitely an interesting, somewhat speculative company.
One of the things that I like to do when I'm trying to predict where a stock is going to go is I try to take a look at where it's been recently, because it seems to me, and I don't have any real critical proof of this, but it seems to me that if a stock touches a particular number and falls or goes higher or whatever, it will often return to that number at some point. So here we are, trading well, like $100 below where it's been. And the question is, how long will it take for it to recover back there? And I think all it's going to take is probably some good earnings or perhaps a major discovery. I mean, just think about the transformative nature of what they're doing in medicine.
That's
Pretty
a
exciting.
very technical analysis of you, Paul.
It is. I'm right into that technical thing. Speaking of technical analysis, Brady,
Yes.
you are the world's living expert on this next company, which we call Roblox.
Well,
What
the
does
only
that mean?
reason that I'm an expert on Roblox is because all of my kids play it on their tablets all day long. And so, what Roblox is a video game platform, and it's really designed for users of that platform to create 3D games, mostly for young people, ages 7 to 13, somewhere around there. But guess what, Paul? 37 million
Oh,
users.
my goodness.
Wow,
And they
a
got our
lot.
picture up there in the slide, too.
Yeah,
I think that's
I'm
great,
the one
Brady.
on the right with the hat. No, maybe
I
not.
don't know.
But anyways, it's a huge company. They got a ton of active users, and it went public just this past week. And initially, the idea was that it went public at $45 per share, but before you could really buy it, and it opened up, which I think was on Wednesday of this past week. Really opened up at about $65 per share, and kept working its way up. So it's doing really well. For a brand new video game company valued at close to $40 billion.
Oh, my goodness.
It's fantastic. And, it's really interesting. If you compare that to other video game companies, which I like to do, the difference is they're not spending millions and millions of dollars on development
No.
because the users themselves are creating the games. And so it's a huge cost savings to the company, which translates into profit.
Yeah, that's pretty fascinating. Roblox, our second company on the move. So our first one was CRISPR Therapeutics. We rotated over to games for kids, to Roblox. And now number 3, we're going back to the healthcare arena. Steve, tell us about Eli Lilly.
Well, it's certainly a name that's familiar with, I'm sure, many of the viewers out there. Eli Lilly, a huge multinational pharmaceutical company. They're associated with such drugs as Cymbalta for depression and Trulicity for diabetes. Well, 1 year ago, Eli Lilly stock was trading at $147.
Whoa.
But earlier this week, it was hanging around the $205 mark. That's a gain of over 30%. And it's
Not
obviously
bad.
a very solid traditional company that's been around a long time.
And a big company, too. So for them to move up 30%, that's a big deal. Eli Lilly's been around for a long time. Kind of fun to take a look at those charts and see them move. So just in summary, again, we looked at 3 stocks on the move brought to us by the Lone Ranger again. And we saw CRISPR Therapeutics, pretty interesting company based over in Switzerland. We saw Roblox, a brand new company on the stock market, and Eli Lilly. Again, a reminder that we're not recommending any of these stocks for you to purchase. One of the many things we do, I think, over at Legacy Wealth Management is we try to keep our eyes and ears on what's going on in the market so that we can give the best recommendations we possibly can, because we're really all about not only just investing and finding the best investments, but we're all about helping you as individuals as you head towards retirement or as you live in retirement, so that you have the most comfortable time that you possibly can have. And that's what we're all about, is trying to find the best solutions for you. Speaking of best solutions, we have a segment that turned up some pretty interesting results today, and we call it our viewer mailbag. And there it is, our viewer mailbag, a very handy slide. Let's take a look at the email that we got with regard to that. I'm going to read that because I thought it was pretty interesting what this person had to say. She said, "We attended a seminar recently, and the presenter was touting several different types of annuities, and he said he guaranteed we couldn't lose money. How do you feel about annuities generally, and should we roll our entire 401k, about 500 grand, into an annuity?" Brady, this is a great question,
Yeah.
because how many times a week do we see people come in with annuities? And we're not totally against annuities, are we?
No, I think, generally speaking, annuities are right up there, Paul, with hedge funds as far as no one understands how they work.
Yeah.
And that's a scary thing if someone says, hey, listen, take all of your money that you've saved for your entire life, put it in this product that you really don't understand. It's a bit of a red flag to me. That said, there is a time and place for annuities. They offer a guaranteed paycheck for the rest of your life every month in the mailbox, and that's worth something for sure. But they are complex. And guess what? There's thousands of different types of annuities. And so it's a very individual situation that may or may not work. But I'll tell you what, Paul, I don't care how good any product is, you should never put all of your money into one product.
I agree with that completely, Brady. And time after time, we have people who come in and they don't really understand the annuity they're in. And that's I can get that. But I will tell you this, that if you're in an annuity right now, and they're okay. It's okay to have some of your money in annuity. But if the annuity has only been doing 2 or 3 or 4% over the last year, in my opinion, you've missed some opportunities.
Yeah, absolutely.
And when people come in to see us, one of the things we try to help them with is, hey, what are we going to do with this annuity? Is it time to get out of it? Is it going to cost you anything to get out of it? Is it wise to stay in it? And we don't have a predefined answer for that. It depends upon your situation, the annuity that you've got, the terms, and so on. So there are a lot of different things that I think come to play in this. I think Brady's comment about you don't want to put too much in any one product is probably a pretty good idea. And the other thing is they often come with what we call golden handcuffs.
Yeah.
And that is, if you stay with this for 10 years, we're going to give you a 30% bonus. Well, that's only 3% a year.
Yep.
That isn't that big of a bonus for staying with something for 10 years.
No.
So that's our thought about annuities. We don't usually get to talk about annuities unless someone asks us a specific question here on television or on the radio. But since somebody did, we thought we would cover it because we know many of our viewers and our listeners every week deal with an annuity at time to time. And if you've got a question, we're happy to help you. Speaking of if you have a question, we are definitely into tax season.
Yeah.
That's coming up for people. And tax season means it's also time to consider IRAs. And I just want to make a direct comment to those of you watching today. If you're thinking about taxes and things like that, if you have an IRA or you're thinking of making a contribution to an IRA and you need to do it, fairly promptly, you can certainly give us a call. And that phone number is 701-365-8083. And we're happy to help you. We can move pretty quickly. Just keep in mind that a good IRA contribution can make quite a difference to your overall tax situation.
You bet.
Okay. Hey, every week we take a look at the stock market week in review. We do it kind of promptly, but let's do that right now because we've got about a minute left in today's show. We could talk for a long
Plenty
time.
of time.
Yeah.
You bet.
Let's take a look at that Dow Jones chart, which shows how the markets have been moving over the last couple of weeks. Now, this shows a 1-month time period. Brady, you want to kind of explain what's going on there?
Well, you see a bit of a dip there a couple of weeks ago, and it's even more so if we look at the Nasdaq here. But we have since, Paul, seen a bit of a recovery. Biden signed the stimulus bill into law. A lot of optimism around vaccines and supply issues as far as that. So a lot of good things coming out of the news, and that chart reflects it.
Yeah, I think so too. And
Also reflects the volatility.
Yeah,
Yes,
lots of
you
volatility.
bet.
We're going to take a look at the Nasdaq chart now because that's even wilder in some ways. Way up there, then came way down, and has now recovered considerably, but still a long ways to go.
Yeah.
And I think some people are seeing a little bit of a rotation out of NASDAQ, but by the middle and end of this week, NASDAQ coming back pretty strongly.
You bet.
Brady and Steve, that's going to about wrap it up for this week's edition of Investment Talk TV. Thank you so much for listening to us. We are excited to come to you every Sunday morning at 10 a.m. Don't forget, you can also watch us on YouTube by simply searching for Legacy Wealth Fargo. You'll find us. Don't forget to listen when you can to the radio show. And until next Sunday, for Steve Poitras and Brady Brunsvold, I'm Paul Meyers. Thanks for watching.